Back in the early 1960s, Warren Buffett bought American Express during one of the biggest financial scandals of all time, where barrels of oil were filled with water instead of oil, and it almost came close to eliminating American Express completely. Is UnitedHealth the same thing today? Is there a possibility this could be the opportunity of a lifetime for people who understand UnitedHealth? UNH, UnitedHealth, is down over 50% in the last 5 or 6 weeks. Why? Because of scandal. Now, they've been hit hard in the last year. They had a CEO basically get assassinated in front of a hotel, and now they're being hit with some scandal at Medicare, Medicaid. And even today, there's evidence and there's talk about this, that the insurer secretly paid nursing homes to reduce hospital transfers. Is there merit to this? I don't know. But the point is they've had to readjust all their future expectations because of this. Now, Medicare and all these Medicaid, that accounts for 55% of their business. The extreme is it's proven they were defrauding the government and they could lose 55% of their business. That's big. Now, what I'm about to say does not mean go buy UNH. I'm going to tell you a story about something that happened in the past, and I'm going to relate it to today with UnitedHealth. It doesn't mean UnitedHealth is a business to buy. What I'm trying to show here is this is how investors make a lot of money. Can you look at a situation in which a company is being beaten up, but it's being beaten up way more than it should be? So look at this business. Let's say 55% of their business is Medicare, Medicaid. How much of that's profit? Is it highly profitable? Not very profitable? Is it a bigger percentage of their profit or a lower percentage? Let's say, for example, that 55% only generated 20% of their profit. Well, if the stock falls 50% and it was reasonably valued before, you would sit there and say, well, wait a second. Why do I care? Yeah, the stock's down 50%, but they're only going to lose 20% of their profit. Let's just move on from this. That's an opportunity to look at. But what happens in the markets is people get scared and they see this kind of thing happen, where you see a stock fall and continue to fall. It's down even more, about 5% today. And this is it in the last 6 months. Just an absolute plummet here. And news follows the stock price. This is what happens, and this is what makes it scary. Now, there have been early signs of trouble. In December, the high-ranking UnitedHealth executive was fatally shot in New York City, raising concerns about leadership stability. Okay, January 12, 2025, reports surfaced about increased medical costs and utilization rates, particularly among their Medicare Advantage members, hinting at potential financial pressures. March and April this year, financial warning and leadership changes. And then on the 17th of April, UNH reports a significant miss in first quarter earnings, attributing it to a higher than expected medical cost due to increased care utilization by seniors. The company slashed its full year 2025 earnings guidance, leading to a 22.5% drop in stock price, the largest single day decline since 1998. Now all these analysts come out, they start downgrading the stock, citing concerns over earnings visibility, yada, yada, yada. News follows the stock price. Where were analysts before then saying, hey, things aren't adding up? This is what's starting to happen. May 13th, CEO Andrew Whitty resigns unexpectedly, and the former CEO, Stephen Helmsley, returns to lead the company, and UNH suspends its 2025 financial guidance, citing ongoing uncertainties. And then in May 15th, reports emerge that the U.S. Justice Department is conducting a criminal investigation into their Medicare Advantage billing practices. The stock plunges another 16.5%. And then now The Guardian reports this. Another blow to the company. Now, guys, let me tell you another story. Back in the early 60s, American Express was a credit card business and it wasn't doing very well. And they had a subsidiary. That subsidiary was giving another company named Allied loans on its oil holdings. Now, I don't know the exact story, exactly who's what, and et cetera, but the bottom line was this. This company would borrow money and it would show their oil, their barrels of oil, and say, come test them out. And they would say, okay, give us money based on these oil barrels because they're assets. They're sitting here. If oil prices go up, they're worth a lot more money. So they'd give these guys all these certifications. Yeah, you got this much oil. And then one day the CEO gets a phone call from a hidden voice, says, listen, these oil barrels, they're just full of water. There's no oil in them. They're just full of water. They did a quick test and they weren't able to get in some of these oil barrels. They were able to get into 5 of them. And those 5 were all water. When they finally opened up the other ones, they realized there was a ton of water in there. So what does that mean? You might be wondering, what does it do anything? Well, if you're lending money out to a company based on them having a bunch of oil and there's no oil in there, what do you have? You have water. What's that oil barrel worth now? Now, what was the potential liability to the company that was a subsidiary of Amex that was giving these certifications saying there were X amount of barrels of oil? Well, that liability was 180 million or so. At the time, American Express was worth about 160 million. So it was far greater than American Express, but it was a subsidiary. So the question was, is American Express on the hook for this? The stock plummeted. The stock absolutely collapsed. This is supposed to sound familiar to UNH. It's familiar in the sense of terrible thing happened, attached to a company, how much responsibility does the company have? UNH, they've been accused of Medicare fraud. How much of this is true? Is there some other thing going on here? Can they actually fix it? We don't know. Well, Warren Buffett, in his infinite wisdom, thought this is not going to work out poorly for American Express. I can buy a great company at a great price. And he went and bought it. And he's owned the shares since. Now, it worked out for them. I'm not saying it's going to work out for UNH, but the same thinking has to happen. Just because something is down a lot, just because there's scandal, one, doesn't make it true. And two, even if it's true, has the market overreacted? This is a very, very quick reaction here. Had they overreacted? Remember, if we can be overvalued on the top side, we can be undervalued on the bottom side. And people are very emotional. When people start selling, the stock just spirals. The question is the overreaction too much? Again, I'll repeat till I'm blue in the face. I am not saying that this will work out for UNH the same way it did for American Express. But there are similarities in the sense of scandal, big stock hit, big stock hit. At least with that one, at least with American Express, there was a chance they were on the hook for a value much greater than their entire market cap. I don't know if that's the case here with UnitedHealth. I've done zero investigation. There's just knowing what's going on, the high levels of it. But you must know this to see if there's opportunity here, because there could be opportunity. Why? Well, look at this. It's selling for 11 times free cash flow and 12 times earnings. Yes, those are going to get beaten up here pretty quickly. But if it's just fear going out there because of the Justice Department thing, and it's just, listen, I know people have been accused of things, and guess what? A lot of times the government makes it a lot worse than it actually is as a way of getting people to plea down and to agree to fines. They're going to make it sound way worse than it is. And again, I'm not saying it's better, but they brought the old CEO back, the back executive team, and hopefully this person is like Warren Buffett and says, we're going to fix this mistake. I don't know how it's going to play out, but I do encourage people who can understand this industry to take a deeper look. If you understand Medicare, all these insurance business, you need to take a look at this. And even if you don't take a look at this, I want you to remember the story, because there will be a company someday that you probably do understand better that is hit with something like this. Is it temporary or is it permanent? I don't know where it is with UNH. If this is permanent and it could bury the business completely, that's something you need to understand. But if it's over-exaggeration, these are the times when big wealth can be made. This is the times when buying a stock like this at the right price can generate a lot of profit. Is that today? I have no idea. I am not an insurance expert. But what I do understand is people tend to overreact. Is this an overreaction? I don't know. You know why? Let's pull up a company we were just talking about right before we recorded this video. Workhorse. Let's look at Workhorse. Workhorse is a company, a car company, that at one point traded for $10,740. There was reverse stock splits, and it's now trading for 83 cents. $10,740 down to 83 cents. One of the biggest idiots in the world, Stock Mo, was sitting there saying, I believe in this company so much, even if they don't get the United States Postal Service contract, I'm still going to own the stock. Spoiler alert, he sold it all. Luckily, he sold it all before it went to this. But we sat there and looked at the company and said, this company's garbage. They make no money. They have no profit. They have to go literally hit grand slam after grand slam after grand slam. It was literally impossible for it to happen. Did I think it was going to fall 99.99%? I won't say that. But we sat there and said, there's nothing behind this company. Now, this fall, to a person who just cares about price, looks like an opportunity. But to an investor who looks at the fundamentals, we're looking at going, yeah, there's no fall in fundament. The company's actually better than it was 5-6 years ago. That's the key. It's understanding about price versus value. That's what you need to remember with UnitedHealthcare and with any company you buy. This is an extremely important learning lesson. And it's something you have to understand as you see stocks fall. Because when we do finally have a bad bear market, and it will happen eventually, we're not going to go the rest of our lives without a bad bear market. When we do have one, that'll be the chance for you to be able to buy great companies at better prices. And if you want to make good money buying great companies at better prices, there's a way to take your cash and be able to get 10-15% returns on that cash, buying the companies or ETFs you love at lower prices. If it sounds too good to be true, I really encourage you to hear this out. There's a thing called cash secured puts. And then for stocks you do own, there's a way to make money on those stocks, basically renting them out to other people in a system called covered calls. Click the link below. I will email you this PDF on cash secured puts and covered calls. I've been doing it for 5 years, and my only regret is I wish I'd done it 20 years ago. It would have totally changed the way in which I made money and invested. So I highly encourage you to do that if it sounds of interest to you. Remember, guys, opportunity is there when things look the worst. Thank you for your time.